Good evening, everyone, and welcome to the seminar. So let me just share this screen with you. So just to make sure you are all on the right seminar, this is helping you make big financial decisions if you were divorcing or separating. So going through today, today's agenda will be an introduction, pensions, the family home, other financial issues, agreeing a settlement, and how bdhSterling can help, and summing up, and questions will come at the end. So first of all, a brief introduction. My name is Paul Davis, and I am the co-founder and advisor here at bdhSterling. Helping me with the seminar today is Kevin Tutt, who's also an advisor here at bdhSterling. So first of all, we're going to go through a few of these issues. Some of them complicated. Some of them will need obviously a bit of help and advice. So what we're going to look at is the impact of separation and the unraveling some of the entwined financial affairs. So some of the more common joint assets would be the family home and pension arrangements, which tend to be the biggest. And then we also have like banking arrangements, savings, investments. And when you're looking at people's overall situation, there's obviously going to be a valuation that's going to be required. And then part of what we do is understanding the options available. Encompassed in this is going to be some personal financial planning issues, and there's going to be like several like short, medium, and long-term issues with this. So, for example, in the short terms, there's going to be immediate changes to both parties' situation on divorce and separation. Children are impacted too, particularly if you've got young children, as well as future earnings that are going to be potentially impacted, changing to household income. And looking at the long term, there's going to be a possible impact on retirement plans. So first of all, we're going to look at pensions or retirement plans. When we look at this, it will involve the pension assets of both parties. There's confirmation through court orders are required, particularly for sharing and offsetting and earmarking. So I'll cover those in later slides. Sharing isn't possible in anything other than marriage or a civil partnership. And for defined benefit schemes, we'd often look at a cash equivalent transfer value. So a defined benefit scheme or final salary scheme, what would normally happen is when you get a statement from your pension, if you're on one of those types of schemes, or your ex-spouse is in one of those types of schemes, it usually sets out what the pension is going to be in the future and at retirement. So often what is needed is an actuarial valuation calculation to be done to give a kind of lump sum value, and that gives and that would be able to split that or offset that against other values. So it's quite important that if you or your ex-spouse has got a defined benefit scheme, that's taken into consideration properly. So managing of pension rights. So there's three ways of dealing with these rights. One is offsetting against other assets. Two is pension attachment orders, or sometimes referred to as earmarking orders. And finally, there's pension sharing orders. All assets are often taken into account, and some could be dealt with differently. So, full explanation on some of those concepts I just mentioned. So first of all, there's offsetting. So one of the key things with offsetting is an aim to provide a clean break. So pension is included with other assets. So the valuations of pensions, house, savings, investments are all pulled together. And the idea is that the valuations are split according to whatever is agreed or whatever the court order dictates between, and that is some of the concepts of offsetting. So where it's most appropriate is if transfer values are quite small for the parties involved. Both parties already have sufficient pension provision, so they don't need to touch those pensions. Maybe securing the family home is a bigger priority for one party or another, in which case one might want to hold on to pension assets and leave the spouse or the ex-spouse with the family home. Time and prospects mean both parties can build a pension fund. So if both parties got a small pension fund, they've got time to build up their own pension funds. And very important as well with offsetting, if someone's got overseas assets or even an overseas pension, quite often those assets can't be split because overseas jurisdictions and overseas finance companies might not recognise UK orders or UK divorce laws. So it's very important that if it's taken into account on the overall, if anyone's got overseas assets and taken out into account in the overall package, and they can't be split, then it's kind of offset with other assets. So attachment orders or earmarking orders. This is the second method of taking pensions into account. So this is kind of based on court instructions to pension trustees. So the idea is that in the future, when ex-spouse retires, part or all of the party's pension is paid and split. So if someone in retirement has £20,000 worth of income coming from their pension, and that's split, for example, 50-50, 10,000 goes to the member, 10,000 will go to the ex-spouse throughout retirement. Possibly payable on death as well, but typically on retirement. One or two things to be clear about though, these types of orders, they could be lost if the ex-spouse remarries again. The ex-spouse would have no control over the timing of when the member retires. So if the member continues working, for example, or just kind of delays taking benefits because they're all set in retirement in other ways, then the ex-spouse may not see that pension when they need it. It's only when the pension member actually retires and starts drawing the benefits. The third method of assessing the pensions is pension sharing. So similar to offsetting, this can provide a clean break at outset. So the benefits are divided at the point of divorce, and there's going to be a legal transfer made from one party to the other. So, for example, if a member has £200,000 in their pension pot, and on divorce, the pension sharing order dictates that the ex-spouse has half, there's 100,000 from the member's pension is transferred across into the ex-spouse's pension. So it's just a clean break or clean split at that point. So this can be an appropriate action when there's a mismatch in pension values, i.e. one party has or most of the pension. This can typically happen if one spouse has had a career and has been working, the other spouse has had a part-time career or has been home looking at children, or maybe one spouse has had a employer with a very generous pension scheme and the other spouse hasn't. So quite often, if you look at the overall kind of pension funds that's built up over the household, this is split between the two. And typically, again, if this happens in kind of later, split happens in later life, the ex-spouse may not have sufficient pension to or sufficient time to accrue a new pension because their working life is limited. Also, over the past years, the UK pension rules have severely limited what you can actually contribute towards UK pensions. So one of the advantages of pension sharing, pension splitting as it's sometimes called, is it's kind of a clean break and calculations can be made then, and the two can then go on their separate ways. Again, there could be some complications when assessing and looking at pension sharing. One of the key complications, which I spoke about earlier, was if someone's in a final salary or defined benefit scheme, in order to calculate the benefits that can be shared or split between the two members, there needs to be a calculation based on a lump sum value of those pensions. As I say, it's an actuarial calculation, and for those types of pensions, professional advice would always be required because it is quite a complex area. Family home. So outside of pensions, or even over and above pensions, this is often the most valuable asset that an individual or a couple may have. Often this can be sold separately and the proceeds are just divided, but sometimes just for like kind of emotional or kind of family reasons, particularly if you've got a young children and do not want that kind of level of upheaval, they can be retained by one party. If it is retained by one party, they're likely to receive a greater share of the other assets in the process of kind of offsetting between the two. And again, children could be the deciding factor of who retains the property. If one of the spouse or the other is to retain the property, there's a few things to be considered. So, for example, there's likely to be a mortgage, and they're most likely to be in joint names as well. So whoever is leaving the mortgage behind may face issues getting a new mortgage because of the limits that they can have. Possible release at a certain time may involve the sale of a property in the future. So if not now, maybe in the future, or there may be circumstances where you retain a legal share until the end of the children's education needs, so that until the child goes off and gets kind of their own job or leaves for university or whatever that might be, and you tend to kind of retain property for one of the reasons would be, you know, the catchment area for the child's school, for example. So I want to bring in Kevin now with regards to private residence relief. So Kevin's going to take over from this point. As I say, there'll be plenty of chances for like questions at the end of this. So let me just hand you over to Kevin.
Thanks, Paul.
For the moment.
Thanks, Paul. Paul, do you mind just putting up some of the slides so we can see, if you could? Have you got the slides in front of you? If you haven't, then perfect. Thank you, Paul. So private residence relief. If the marital home, the residential home, has to be sold as part of the settlement, one of the advantages is the couples can claim against the private residence relief. What that means is that any gains arising from the sale is free of capital gains tax. There's no tax liability in selling their own property. The relief is only available on one property. So if there's a buy-to-let in the background or an investment property that's also to be sold, there could be capital gains tax liability on that second property. Okay. If you just move to the next, thank you. The next slides, we'll be looking at joint accounts and savings, inheritance and non-matrimonial assets, and maintenance payments. So if we can start with joint accounts and savings, this goes for all cash deposits. Generally speaking, the assets will be valued and the current value at any particular time will be divided as part of the overall settlement. And that will, although we have joint accounts and savings, that will tend to include things such as cash ISAs, maybe premium bonds, things of that nature. Inheritance and non-matrimonial issues. This is quite a good point to raise because often parties will bring previous assets to the marriage or civil partnership. What I mean by that is that that can include a share portfolio, a business, or an investment property where one of the parties has owned it prior to getting married. In addition to that, inheritance could be received during the term of the marriage. Now, from the point of view of a settlement, they're classed as either matrimonial or non-matrimonial. Matrimonial is if they form part of the family assets and they're used on a regular basis, they will be split. If they're non-matrimonial, they tend to be excluded from any sharing order unless they're required to meet any particular needs and objectives for one of the parties. Moving on, Paul, thank you, to maintenance payments. These are obviously regular payments through a court order for one party providing financial support for the other. One thing that, from a financial planning perspective, is to ensure those payments against death, critical illness or accident. What that would mean is that, unfortunately, if you passed away or alternatively you're unable to work and you lost your income, those valuable benefits would still be passed to the recipient and they would not fall into financial hardship. So there's various policies that can meet your needs, and we'll be more than happy to discuss those and look at the ones that are relevant to your particular needs. Thank you. Agreeing a settlement, there's particularly 5 ways to agree a financial settlement. They're listed on the screen, and what I'll do is I'll go through those on an individual basis. So if we start with negotiation, this is where couples basically arrange a settlement themselves. Depending on how they feel, and if it's a relatively simple arrangement they can sort out amongst themselves. It's all quite amicable, or it can be, and it's important to use two separate solicitors for impartiality. The second one that we look at is mediation. You have an experienced, trained mediator to help couples decide how to resolve issues. It's not a binding agreement. It's more of a less formal agreement, I should say. And you tend to have a family lawyer or someone who knows the family well, likely to be involved in that process. The fourth one is family arbitration. Couples must agree on the choice and the scope. What I mean by that is that they can use an arbitrator to discuss all of the assets and all of the settlement, or just one or two assets. I'll give you an example again. If one of the parties has a share portfolio or an investment property in their own name, they're happy with the other arrangements on how the assets are split, but they just need some arbitrary help on one of those other assets, as I say, either investment property, a business, or a share portfolio. They can use this process for resolution of a single issue. Collaborative divorce. This is obviously both sides who are committed to achieving a settlement. Unfortunately, if the agreement breaks down, all financial parties have to walk away. Financial planners at this stage can get involved. From the point of view, we look at what-if scenarios and financial strategies moving forward. So what situation would a particular party be in moving forward because of the financial situation they've been offered? So we can give support, advice, and any recommendations along those lines. And the court will usually convert that agreement into a court order if they have received this type of advice. And last but not least, litigation. If all other options aren't possible, then the court will rule on the settlement. Basically, the judge will decide on a fair settlement. There's no set rules, but the children's welfare tends to come first. And the primary carer of the children tends to get the larger share of the assets. And any surplus wealth tends to be shared equally. So that process tends to be used if any of the previous four arrangements can't be utilised by each party as a last resort, so to speak. So I now pass you back to Paul, and thank you for listening.
So this kind of brings us back to like how we can help with you. So what we can do is we can work with any solicitor to analyse assets. We can consider the income needs of each party and ensure that a fair outcome is reached. How long money will last is always like a key consideration, and that's something we can look at and do via our kind of cash flow planning and our cash flow forecasting. So it's not just about looking at the assets of what they are now, it's looking about what they can provide and produce for the spouse or the ex-spouse in the future. In order to make this kind of analysis, there's a detailed process that we need to go through to determine each individual's financial position. So part of that fact finding will be looking at aspects such as monthly outgoings, income and expenditure, savings, investments, present and future tax liabilities, and any outstanding debts, loans, mortgages, credit, that sort of thing. Difficult to gauge as well, but anticipated inheritance can be quite an important factor also. When we put all this together, we put it into a financial planning forecast or cash flow planning forecast, and within it there's a detailed report that you will be assessing your kind of future financial situation, whether you'll have enough money for the life that you want, and that's important in both directions. So do you have enough money now, and in the future, what do you want to do in the future? So do you need to save, or can you spend and live the life you want without having to like put money aside for a rainy day? The factors that that we put into this forecast would include inflation, growth rates, and the level of investments and pensions that people will have, including any sort of planned expenses now or for the future for you or your family. It's an ongoing process, so once we've set up a financial cash flow plan for our clients, we review that typically annually, but there might be a few life events that happen in between, which means that we would revisit that and see how that would impact on the cash flow planning. Just making sure people don't run out of money and they can do what they want to do now. It might be, as I say, an annual event would happen for us to do a review, but in between we might look at something along the lines of, someone might need a lump sum of money to go on a big holiday, or they might want to help their children with a deposit on their house. That would affect the cash flow. So that's a typical event that we would look at in between the annual reviews. So hopefully this presentation has helped your thought process. We have some other information around financial issues of divorce, and we would offer a free consultation that we can kind of sit down and have a conversation and just see where we are, where you are with your situation, and maybe where we can come in and help. And that's just some end details to follow, including just like the the T's and C's, and we're confirming we're authorised and regulated by the Financial Conduct Authority. So are there any questions?
I've got one that's come through, Paul.
Okay.
The question is, do I need to change my will if I get divorced? The short answer to that is yes. A will isn't necessarily revoked just because you got divorced. It's still valid. So it's important that if your beneficiaries of your estate have changed to someone different, your new partner, whoever it may be, it's important that you do change your will, because if you don't, it could mean that the person that you want to benefit from your estate in fact doesn't. So it's important that you change your will to nominate your correct beneficiaries after divorce. Hopefully that answers that question.
Yeah, I've got one other question that's come through as well. So just going back to the pensions and the offsetting, earmarking and sharing, and I think someone's picked up on the fact when it comes to earmarking or attachment orders, is it possible for a spouse or an ex-spouse not to benefit at all from those orders? And the answer to that is yes, it is. It is quite possible that the ex-spouse on the earmarking order may not actually benefit from that at all, because I think I said before, the pension member can kind of control that situation in terms of when they delay retirement, because the benefit isn't actually, the pension benefit isn't actually paid out until the member retires, and then the split of the pension is paid between them and the ex-spouse, that member can continue to defer retirement as long as they can afford to, maybe just to even spite their ex-spouse. So it certainly isn't as flexible as kind of maybe offsetting or even pension sharing, where there is the split at the time.
We have another question that's come through. Just wait. How can BDH help me with my divorce? Just really to follow what Paul said earlier. The solicitor will go through the formal process and all the legal requirements in going through the divorce with you. What BDH can do is put a structured plan in place to give you clarity on what your financial situation is now, and any recommendations that we make over the next 5, 10, 15 years to help you reach your aspirations and help you with your financial plan moving forward. So I think Paul mentioned about cash flow planning and other things that we can help you with. You can lean on us for the administration side, any paperwork you're not too sure about, we can help you with that as well. So hopefully that gives you a bit of a snapshot on how bdhSterling can help you, and that's just really following on from what Paul mentioned previously before the end. Just seeing if we have any more questions coming through. Doesn't seem to be any more coming through at the moment, Paul.
No, well, just to add to the answer to your question there, Kevin, again, where we can provide value is particularly with pensions, and as I stated before, defined benefit pension schemes can be quite complicated, because unlike money purchase or just normal personal pensions, there isn't actually a fund value there that you can see or share. So it's quite important to get that. Valuation made, the actuarial valuation, and that's also a requirement by the FCA in order to get proper sort of pension advice from pension transfer specialists such as ourselves.
Okay, we have another question regarding the pension sharing order. Mm-hmm. Does the court set a date that the pension sharing needs to take place? Also, is this date likely to be the next few months or later at retirement date? I'll pass that back over to you, Paul.
Yeah, that's fine. So pension sharing order is usually, or very commonly, it's done at the time. So it's done on divorce, so not at separation. So it's always once the divorce finalised, then the court will produce a sharing order, and that sharing order would be for the pension, whatever the percentage split is, that's usually applied straight away. Now it might take a little while for that order to take effect, in as much as the trustees, again, they might have to do some calculations, but it's very rarely is it set for anything other than kind of an immediate effect. So it wouldn't be a share of the spouse's pension like 5 years down the road. It's normally done at that point. As I said, one of the key things about pension sharing is the clean break principle. So that will be done instantly once the divorce has happened and the court has produced that order.
Okay, just seeing if any other questions are coming through. As Paul said, if you want to contact us on a separate basis via the email we gave out, and have a chat on a one-to-one basis through a video call, more than happy to arrange that if there's no more questions this evening. If there's any other questions coming through, please feel free to ask.
Yep. Well, thank you very much for your time today, everyone. And yeah, so if you got any other questions in the future, please just drop us a line, or as I say, the email to inquiries, we can set up an initial meeting or appointment. So thanks very much for your time today.
Thank you very much.